The overhang of tariffs and floods in North India cast a shadow, but the market comes significantly off its opening lows. IT and Realty are the big drags, while consumer durables and metals are eking out some gains.
Indigo Airlines co-founder Rakesh Gangwal and family likely offloaded a smaller than intended 3.1% stake. While the reason for trimming the deal size is unclear, Gangwal's spectacular exit trend stands out.
Veteran investor Ramdev Agrawal tells CNBC-TV18 that the uncertainty over a trade deal presents an opportunity to invest, as the deal will eventually happen. But JP Morgan's Jahangir Aziz frets that the tariffs will hurt foreign direct investment.
The Finance Ministry's economic review says while the immediate impact of US tariffs appear limited, the secondary and tertiary effects pose a challenge. Given this, it sees trade negotiations as crucial.
Good afternoon. You're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Patakia. With me, as always, is Vamakshi Thoria. Vamakshi, good afternoon. The last 2 hours of the August series and the recovery that we had seen from the lows of the day has been swiftly sold into. And the bulls would be hoping that at least today's lows are preserved, if not more, and we start the new series on a positive note.
Well, absolutely. Good afternoon to you, Hormaz. The markets for now, it looks like it's a tough situation for them. Of course, we do have the US tariffs that did come into effect. So, tough situation for the market for now. Let's take a look at what the mid-cap end of the market is doing because, the advanced decline ratio is largely in favor of the declines. The mid-cap index is down almost 0.8%. The small-cap index too is not doing too well. A similar, downtick in the small-cap index as well. Sectorally speaking, so far as I can see, all sectors are in the red. And the fall that is being driven on the benchmark index, Hormaz, is largely being driven by the two main pillars, which is IT as well as the Nifty bank. When we look at the pullers and draggers as well, largely Infosys is pulling the index lower by around 29 points. ICICI Bank is, pulling the index by almost 25 points. TCS, HDFC Bank, HCL Tech, all of these are banking and IT names that are actually pulling the benchmark index lower.
Talking about the recovery in HDFC Bank just a couple of hours ago, and that recovery too has been sold into, and that has had a cascading effect on the Nifty. So now, as things stand, we are around about 50 points away from the lows of the day, which was around 24,507. So that level comes into play again as the selling pressure is starting to increase once again as we count down to the end of the August series. Of course, this is going to be a negative close to the August series. It will be interesting to see how trends emerge for the next one. But of course, there are a lot of stock-specific movers in the broader markets as well. Just wanted to highlight Indigo after the block deal. 5% lower, continues to remain at those levels. There is some selling pressure also seen in some of the NBFC names. Sundaram Finance is one of them. That too is down 5% today. Shriram Finance is the other one. And that too is trading with losses of anywhere between 3.5% to 4%. What has also extended its losses is Page Industries and some names like Bharti Hexacom within the broader markets. But the top story that we have been tracking all day today, India now faces a 50% tariff from the US that came into effect from yesterday. Now exports worth almost $60 billion to the US get impacted. The Trump administration notified India about the additional 25% tariff earlier this week. Now, President Trump, while making the announcement earlier in August, had alleged that India was fueling Moscow's war machine by buying Russian oil. Parikshit is now joining in to tell us more on this. Parikshit.
Well, strong statements coming in from the United States on a day that 50% tariffs have been imposed. Top U.S. officials like Peter Navarro saying that U.S. can remove the 25% additional tariff the moment India stops buying Russian oil. Kevin Hassett, the NEC director, has gone on to say that India has shown reluctance to budge on the trade deal, give access to US goods. And if that continues to happen, Donald Trump is not going to budge either. So it seems that as of now, the United States has taken a very tough stand. There doesn't seem to be any sign of thaw or a icebreaker as yet. The Indian government, of course, is trying to negotiate a pause with the United States. Those efforts continue on a bilateral basis, but they're happening behind the scenes. On the ground, the Ministry of Finance has gone on to say in its monthly economic review that while the immediate impact of the tariffs seems very limited because there might have been a lot of front loading earlier by exporters, there is bound to be a secondary and tertiary impact that we are going to see in the next 6 to 8 months. The Finance Ministry Economic Review also said that we have seen how the trade uncertainties have been impacting business confidence and investor sentiment. And business confidence and investor sentiment will be impacted in India too if these trade uncertainties were to continue. And that's why trade negotiations and finding a solution to this problem is crucial. The exporters, the textile sector, the footwear sector, the leather sector, gems and jewelry, auto components, more labor-intensive sectors are likely to be impacted. There could be job cuts as well. The Ministry of Commerce is now holding regular meetings with exporters to understand their concerns. We believe an export promotion mission could also be announced soon, and there could be some sector-specific measures as well. But on the whole, the message that is coming from the government is that we are going to work on export diversification. We can absorb the hit and come out stronger.
Absolutely, Parikshit. That is something that we all will be hoping for. Let's in fact listen into what U.S. Economic Advisor Kevin Hassett and U.S. Treasury Secretary Scott Bessent had to say on the U.S.-India relationship.
I think that it is a complicated relationship, that it's integrated some with the problems that we're trying to put extra pressure on Russia so that we can get a peace deal to save millions of lives, and the Indian intransigence about opening their markets to our products. And so I think that when you're looking at trade negotiations, one thing I think we've all learned is that you need to keep your eyes on the horizon and recognize that there are going to be ebbs and flows in things before we reach the final position. And if the Indians don't budge, I don't think President Trump will either.
President Trump and Prime Minister Modi have very good relationships at that level. And it's not just over the Russian oil. The Indians came in very early after Liberation Day to start negotiating on tariffs, and we still don't have a deal. I thought that we would have a deal in May, June. I thought India could be one of the earlier deals. And they've kind of tapped us along in terms of the negotiations. And then there is also the aspect of the Russian crude purchases, which they've been profiteering on. So there are many levels going on here. I do think India is the world's largest democracy. The U.S. is the world's largest economy. I think at the end of the day, we will come together.
Well, White House trade advisor Peter Navarro cranked up pressure on India to halt its purchases of Russian oil, says the road to peace in Ukraine goes through New Delhi. He also added that India and China must stop buying Russian oil and that the tariffs on India can go down by 25% if they stop buying Russian oil. Now, what is the impact of this tariff on various sectors? My colleague Hormas is here to give us the details. Hormas, take us through that.
Well, the tariff drama has now taken another step with that additional 25% levy on Indian exports taking effect from yesterday morning. And with this, now the total tariff levy has now become 50% on all Indian exports to the US, barring, of course, those that are exempt. Of course, there is an impact now on these tariffs because of this. Now, almost $86.2 billion worth of exports to the US, of which almost 66% of them, or around $60 billion worth of exports, get impacted, and that is according to the GTRI. Now, as per CNBC-TV18 survey, in case these 50% tariffs stay for the remainder of FY26, India's GDP growth is likely to be hit by 1% overall, and for the remainder of the year, that hit is seen at around 0.5%. However, on the flip side, economists believe that the rationalization of GST rates, potentially that is slated for next month, that could offset some of that impact, as consumption would take some boost, and that could offset some of that impact. Now, as per the survey, SBI economists are expecting a 20 to 30 basis points hit to the GDP, and Goldman Sachs is worried that in case these 50% tariffs stay for the rest of the year, that GDP growth of India could fall below 6%. In addition to that, the current account deficit of India, which is currently at minimal levels, could also increase to anywhere between 1.2 to 1.5% of GDP from the current 0.7 to 0.8%. And there is also a worry that the rupee, which is also trading at record low levels, could see further pressure and can even slip below the mark of 88 in comparison to the US dollar. Now, if you take a look at the sectors that are having a significant exposure to the US market, and that will have a bigger hit because of these tariffs, take a look at this. The textile sector has 30 to 70% of their revenues coming from the US market, say for companies like Gokaldas or Indocount or Wellspun Living. Most of these companies get almost 2/3 of their top line from the US market. The seafood exporters, be it the Avanti Feeds and the Apex Frozen Foods of the kinds, they get also 50 to 60% of their top line from the US markets. And the gems and jewelry segment, most of that impact is on the unlisted space. But we spoke to the council earlier and they mentioned that the US market is a huge one for them, almost to the tune of $9 to $10 billion. He also spoke to specific companies like Pearl Global yesterday, and they mentioned that the companies that they are dealing with in the US are asking for discounts of anywhere up to 15 to 20% to nullify the impact of these tariffs. Either that, or they are asking the companies to shift production to other countries to offset that tariff impact. They also mentioned that half of their garments business is dependent on the US markets, and in case the tariffs do remain at a steep level, that could force a $6 billion shift in exports and endanger jobs worth lakhs. Now, the impact on stocks, of course, has been felt ever since these tariff threats came into play. Take a look at the stocks, the textile names, Gokaldas, Wellspun Living, Indocount down anywhere between 15 to 20%. The shrimp feed names as well down anywhere between 10 to 12%. They are facing some pressure in today's session as well, despite some of the recovery that has come in from the lows of the day. So most of this reaction was already being factored in from almost a month earlier. As we highlighted earlier, the gems and jewelry reaction is mostly in the unlisted market. Diamond hubs like Surat may see an impact, and the GJEPC also mentioned that the industry cannot work with a 50% tariff, especially considering the size of exports that they have to the US market. Now, indirectly, the impact that could be faced if these tariffs stay for too long, barring these sectors, you could see potential job losses. The job that could result in loss of income, and a loss of income could also mean an impact on consumption, despite the potential GST rationalization that is likely to take place next month. And if that is so, the consumption rally that has taken place over the last week or two, that could be put to test, particularly because we are right on the cusp of the festive season starting in the country. Now, there is another sector that could face an impact, and that is the banks. The Nifty Bank Index is down almost 1,300 to 1,500 points in the last 3 to 4 trading sessions. Why are they worried? Because the exposure to the tariff-affected sectors, the industry could seek easier repayment terms in case of something like this that happens for the tariff hit sectors. And some banks have already seen asset quality pressure in the first quarter, and that could have a further impact going into the future quarters ahead. And that is why the Nifty Bank has been an underperformer, and as a result of which it has had an impact on the Nifty as well. So a step forward, 50% tariffs taking into effect. Most of it still sees as a negotiation tactic, but it will be interesting to see who budges first in these developments.
Well, thank you so much for that comprehensive list, Hormaz. But, as India faces the 50% US tariffs, we also caught up with veteran investor Ramdev Agarwal and JP Morgan's Jahangir Aziz. Listen in to what both of these gentlemen had to say.
If it is 50%, then we'll lose 50% of the turnover. If it is 25%, we'll lose 25% of the turnover. So you can't figure out what will be the impact in particular company and the particular industry. And then it's not that only trade-related thing is happening in the entire economy. I mean, Indian economy is on the move. We have so-called, as PM said, arsenal of reforms coming in. This is a time when government is trying to unleash reforms. And so you have to also look at it, because this is all going to happen simultaneously. Then there is a massive flow of the domestic participation. So you have to see, when you look at market, you have to look at everything. And that's why I said, instead of looking at isolated things, let's look at it. What will be the impact on the earnings? Because the earnings are what is going to drive the markets. If we have, say, 25% deal in next 10, 15 days or month or whatever, I think market has already calibrated that particular kind of thing. And the whole world is paying. It's not that we are only paying 25%, nobody else is paying.
I think it is much better to look at the sectoral impact. And I think the sectoral impact is where it matters, and it matters a lot because the impact over there can be significant. 2.4%, roughly 20% of India's exports goes to the US. There are certain things that are exempt from the 50%, which is electronics, which is fuels and pharmaceuticals. That brings it down to about 1.7, 1.8% of GDP. If you take the value added of it, i.e., if you take the import content of that, then the impact is about 1.1% of GDP. If you are going to get a impact coming from the 50% tariffs, and this is going to get concentrated on sectors like seafood, sectors like textiles, sectors like non-electronic manufacturing, gems and jewelry, then the impact on employment is going to be significant. The current account deficit is likely to rise. I mean, it's going to go probably 1.5% of GDP if the impact of the 50% tariff is significant on exports. But I think more than the current account impact, I think the impact is going to be on FDI. FDI over the last 2-3 years, after peaking in 2021, FDI has seriously gone down from the $65-70 billion a year down to about $25-30 billion a year. On the other hand, outward FDI has risen significantly, and right now net FDI is almost zero. So India's 1.5% of GDP of current account deficit now needs to be financed almost entirely by portfolio flows.
Now, Prime Minister Narendra Modi will embark on a 2-day visit to Japan later this evening to participate in the 15th India-Japan Annual Summit. Now, this will be his 8th visit to Japan and the first annual summit with his Japanese counterpart, Shigeru Ishiba. Now, the External Affairs Ministry has said that the two Prime Ministers will review the special strategic and global partnership between the two countries. And in the second leg of his visit, the Prime Minister will also be travelling to China from the 31st of August and the 1st of September to attend the Shanghai Cooperation Organization Summit. Now, he is expected to hold bilateral meetings with several leaders who will be attending that summit. He'll also be hosting Russian President, Vladimir Putin on the 1st of September.
Well, ahead of Prime Minister Modi's visit, sources say that the government is considering some changes to Press Note 3 that was imposed in 2020 to clear investments linked to Chinese companies. Parikshit is back again. Parikshit, what is the update on this front?
We have seen that despite the Galwan clashes that had taken place, India and China are resuming trade and economic relations. Border trade has opened up. The restrictions on rare earth magnets are being lifted. Tunnel boring machines are now being sent to India, which were earlier being restricted by Chinese companies. Tourist visas are also resuming. In that light, there is a view within the government that Press Note 3, which had been issued in 2020, should be revisited, reviewed, and possibly lifted as well, because the circumstances have changed since then. We're given to understand that in the DPIIT, in the Department of Commerce, and across interministerial consultations, there is a discussion on whether certain tweaks to the Press Note 3 can be made to facilitate Chinese investments in certain non-strategic, non-sensitive sectors. In fact, the government think tank, in a series of meetings over the past few months, has recommended that the Press Note 3 may be lifted, considering the changed circumstances. For example, Press Note 3 was brought during COVID-19. India and China had border tensions. So this was done at a time when things were at an all-time low. There was a worry of opportunistic takeovers, and times have changed since then, and India is reliant on the Chinese electronics industry, on the Chinese technology industry, and JVs have also been cleared, despite Press Note 3, with Chinese companies on a case-by-case basis. So the government may relax requirements for approval in non-sensitive and non-strategic sectors. In fact, the manufacturing industry, the PE funds have been making representations to the government on this behalf to allow investments via automatic route till a certain threshold in some sectors. So let's see what happens. A final decision is still awaited.
Parikshit, thank you for that important update there. Take a short break here on Business Lunch. More news and updates on the other side. Stay tuned.
Thanks for staying tuned into Business Lunch. Well, Indigo Airlines co-founder Rakesh Gangwal today sold a little about 2% stake via a block deal of rupees 5,000 odd crores. My colleague Sudarshan is joining us for more details. Sudarshan?
So as per sources, block deal size was reduced from 3.1% to 2.2%. Now block deal has happened for 2.2% equity, and that was worth more than rupees 5,000 crore. And it's likely happened rupees 5,838 per share. As per the earlier announcement, or say as per the term sheet, block deal was supposed to happen for 3.1% equity, and that size was of more than rupees 7,000 crore, and floor price was rupees 5,808 per share. Now the block deal has happened. Now, Rakesh Gangwal and his trust's holding has reduced to 5.6% from 7.8% that Rakesh Gangwal and the trust held as of June 2025. So what next? Now, total promoter holding is around 44%, of which Interglobe Enterprises and Bhatia family hold around 35.7%. Rakesh Gangwal and trust now hold 5.6%. So, we'll have to see if Rakesh Gangwal goes ahead and sells this remaining 5.6% stake in the next tranche, that is basically after 150 days, he would be eligible to sell. And as per historical data, it suggests that he has been selling more than 5% stake. So if he sells 5.6% stake, that means he would be exiting the company much before than his plan. He had planned to exit the company over next 4 years. So next block deal is likely to happen in Feb or March of 2026. We'll have to wait and watch if he decides to exit the company by selling his remaining 5.6% stake. As of now, stock is under pressure, down more than 4%.
Well, thank you so much for that, Sudarshan. The stock down almost 5%. But on that note, let's take a short break then. More news and updates follow on the other side, so don't go anywhere.
Welcome back. Now, more than 30 people are killed and many are injured in the floods and landslides triggered by heavy rains across Jammu and Kashmir. Samir Bhatt of News 18 joins in with more on this.
Continuous rainfall which has occurred in Jammu and other parts of Jammu region on Monday, Tuesday and Wednesday. That was yesterday. These rains have caused huge destruction of damage. Many lives have been in fact lost. You see in Katra there was landslide. So many yatris have been killed there. They have died there. In Doda, so many human lives have been lost. In Kathua earlier there were landslides which caused loss of so many lives. If I talk of damage of property, so many houses have been damaged in Jammu, Kathua, Udhampur, Riyasi and other parts of Jammu. There has been huge damage to private and as well as public property, PDD infrastructure, PHE infrastructure, as well as other government buildings. They have collapsed. I am standing at Jammu Tawi, 4th bridge, River Tawi, and you can see this bridge, which is called Bhagwati Nagar 4th bridge. This has also suffered huge damage. You can see its barrages have completely damaged, and this whole bridge, which was very vital, it has suffered major damage due to the flash flood, due to the huge water which occurred, which crossed danger mark on Tuesday when there were heavy rains in Jammu. The Tavi River crossed all danger mark, which led to damage to this river, this bridge. And you can see there one vehicle which has been also damaged due to this. Though the person who was owning this car, he has been saved, but this car suffered damage. So if we talk of this whole area, this has suffered huge damage, as well as now the houses which were adjoining to this river, they have also suffered huge damage.
Well, absolutely an unfortunate set of events unfolding in Jammu and Kashmir. But with that, that's all the action we have on this edition of Business Lunch. Don't go anywhere. The Mid-Cap Radar will come up next.